Welcome to Red Pill Markets. Today is March the 9th, 2020. We're looking at the market close. Yes, today, pretty much everybody took a beating in the stock markets. You were lucky to be 7% down. That was an honor. If you were in the markets, long in the markets, and you were expecting them to go up, if you only lost 7%, consider it a gift. Dow was down almost 8%. S&P 500 down 7.5%. NASDAQ 7.25%. Small caps were down 9%. That's kind of concerning in the near term, but the show must go on. So the good news is I got a little pep talk from one of my mentors, K. Kim. He gave me something to think about, something else to watch out for. So a lot of you guys may not know, but this channel's only like a year old. I have been participating in stock markets for a good part of 25 years. But this is the first year that I spent time looking at charts, trying to make decisions based on charts. Before it was just numbers and patterns, but I've been using charts along with the numbers and patterns and trying to look at the news to try to figure out our next moves. Sometimes it pays, sometimes it doesn't pay. One thing I figured out is just learn from your mistakes, even if you just got totally blindsided. Just live with them, own them. Try to do better, and try to remember next time not to make the same mistake. Okay, so let's look at some charts real quick. So if you decided to take the trade that I recommended, I'm hoping most of you guys didn't, because you did have a choice and I told you what the other choice was. But if you decided to take that trade, you lost at least 7% today. If you're feeling bad about that loss, you could have lost 25 to 30% like oil did. A lot of bankers were long on oil because they have a lot of investments in oil. So if you think you did bad losing 7%, you could have lost up to 30%. Speaking of bankers, XLF. Let's see how the bankers did. Financials did. Financials were down 9%, 9.25%. Let's look at semiconductors. Semiconductors were down about 8%. And the treasuries were down, but they recovered half of their losses for the treasuries, especially the 10-year treasury. I think it was almost down to like a 0.3 and now sitting at a 0.6. So what we're watching out for is oil, to make sure that price stabilizes. I think the price is about, it might be about 35, no, maybe 32, 35 per barrel. I think fair value for it is about 25 to 27. So it could have another 20 to 30% to fall. We're watching out for it. We're also watching out for the 10-year yield to make sure that it stays steady. It doesn't lose 10, 15, 20% in any particular day. Let's look at IWM. Okay, small caps was down 9.76%. Small caps were down the most. Normally, if the markets do good, small caps go up. But if financials don't do good and oil doesn't do good, then the markets don't do good. So I learned that from Gregory Mannarino And it's clear, if you see financials down a lot and you see oil down a lot, you're going to see the markets down a lot. So we'll pay attention to oil. We'll pay attention to financials. We need to get a handle on keeping up with this oil trade war that just started. This recent one that just started over the weekend. So that's something else we're looking at. Let's look at the futures for now. And let me tell you my concerns about the futures for now. Okay, so we had those 7, 8, 9, 10% drops in the market. I decided to stay with 100% put them stable value for tomorrow because today was just such an ugly day. I didn't want to just go purely off of emotions. I wanted to have time to clear my head, talk myself off the ledge, and regroup and rethink. So one thing I don't like about these futures, you see all the futures are up between 2 and 3%. I don't like to see that type of jumps like that. I know we just lost on average about 9%, but I still don't like to see these types of moves like this. I'd rather it be closer to like 1%. So I'd rather have steady 1% gains per day because the markets as a whole, that's a good move for them, 1% per day, as opposed to 2, 3, 4, 5% per day. Because that's how we run into trouble. It's too much volatility when it gets above 2% per day that it's moving. And I think for the last 3 weeks, the market's moved at least 3% per day so far. If you average it out, it's probably closer to 4% per day. The market normally doesn't move like that. If you see markets moving like that, you know there's something seriously wrong. So if they want to get us back in here, get our confidence back up, they need to move the markets closer to 1, no more than 2% per day in either direction to build some confidence. Now, with that being said, in the shorter term, probably in the next 2 or 3 months, there are banks telling their bigger clients to sell their positions as the markets go up in value. So just know we're going to have some more of these crazy times coming. They may even be crazier than this. You may even see like a 3,000 point down day, 4,000 point down day, or 2,000 point down days, 3,000 point down days. It's coming. We just don't know when. Now, do I think the markets are in trouble? So markets are closer to bear territory, what they consider bear territory, which is like 20% down from their all-time highs. But if we just change our terminology and think of a bear market as closer to 30, 35% down over like a year period of time, if it stays in that zone, then we have a little ways to go. So do I think we're going to be in a long-term bear market, like long-term, like a year, year and a half? No. I think we're going to have this little correction that we have here. It's going to go up and we're going to stay in a range for a while. And it may take us another 6 months, a year to hit our new all-time highs. I don't think real trouble is coming until 2023. That's when I think the real trouble is coming. But you didn't hear that from me. Thank you for watching these videos. Like, share, comment, and subscribe later.